Welcome to another episode, actually episode 108 of Real Estate, Real Life, Real Talk, and Real Live with your host, myself, Damon, the agent, as I come to you each and every Friday at 12 noon, bringing you the latest real estate news, along with, always my topics of discussion. So, first, let us begin that. Hold on for 1 second. I got to make sure I'm connected on all platforms. Okay, I'm trying to figure out what I share. All right. Again, like I said, okay. So again, like I said, I'm on all social media platforms. Please follow me on Facebook, Instagram, LinkedIn, Twitter, YouTube, Snapchat, TikTok, and LinkedIn for those of you who are not already following me. And again, like I said, I like to begin my show always talking about the latest world of real estate. And today I'm going to talk about big banks versus local lenders and the benefits and the pros and cons of each. Now, first of all, when I mention big banks, I'm talking about big banks such as Bank of America, Wells Fargo, Chase, any big major bank and the benefits and the not benefits from those and the benefits and the not benefits from local lenders. Now, here's the difference with them. Big banks, like I just mentioned, Bank of America, Bank of America, Wells Fargo, Chase, etc. Those banks have been around for a long time, which is very, very good. But they have a lot of old money. So the good thing about when people tend to use them is if a person submits an offer, then they know that the bank has done their due diligence in most cases when they've gotten a potential buyer approved for a home loan. They know that the person must really have a significantly higher credit score because in most cases, those banks tend to deal with 660 and above, depending on which bank you're using. Now, that's somewhat true, but the con with that is sometimes when you've been banking with those banks for a long time, if you're a customer of theirs, they don't always do the pre-approval like they should. Navy Federal is a bank that I would say has a terrible reputation in this particular area when it pertains to if a person goes to Navy Federal to get approved for a home loan, and if they submit their offer using a Navy Federal approval letter, 9 times out of 10, depending on the listing agent, such as myself, we're going to question things because I've had quite a few deals over the years with Navy Federal, and only one went. And a lot of it had to do with Navy Federal in-house management. They're not thorough at all, and they're kind of outdated as far as the process is concerned. Many years ago, pre-qualification was the thing in which you just ran someone's credit. That's what pre-qualification is. And then it became pre-approval. You ran their credit, you got their proof of funds, you got their annual incomes to make sure. But, in many cases, there are some lenders that do a thing called desktop underwriting. So when they do their desktop underwriting, they're basically seeing if this person can actually qualify and go forward to make it to settlement. Navy Federal doesn't do that. A lot of the big banks do not do that. Now, here is the disadvantage with using a lot of big banks. Most big banks take 45 to 60 days to close, meaning to go to settlement. That's the amount of time that they tend to require in which, because they're doing inter-departments within the bank. Like, sometimes the left hand don't know what the right hand is doing in these banks. Another disadvantage with using big banks is it's hard to reach a consistent representative on your file. You can call, they sometimes transfer you to a different person each time. And then another thing is, though, after hours, when banking hours is over, you're not going to get in contact with anyone. And to be honest with you, after 12 noon, a lot of times you cannot get in contact with anyone at the bank when you're reaching out to them about files and everything. Everyone nowadays wants you to tend to email them. We're in a society where people don't want to talk on the phone. They want you to email them. And that allows them to respond whenever they want to respond, because they can always say, I never got your email, or I didn't get it till the next day. But when you speak to someone, you know what I'm saying, you are handling business immediately at that particular time. And then there's no personal touch with a big bank, because when you're dealing with a big bank, the reason why there's no personal touch is because, like I said, they tend to switch up between different people all the time on your file. Initially, it may be with their processor, then it may go to another processor, then it may go to underwriting, then it may go to a closing department. So a lot of times you're dealing with different people in different departments. Sometimes you're not even speaking with the same loan officer in that case. And sometimes it can be like a non-personal touch, especially if some issues come up during the transaction. Now, local lenders tend to have a more personal touch when it pertains to dealing with buyers. On top of them having a personal touch, most local lenders can always tell you which local programs that the potential buyers qualify for. Most big banks are not offering programs, even though Navy Federal has this thing in which they tend to say that it's a 100% down program. It's really not. Truth be told, they're putting that money on the back end of the loan and everything. And that's why most people who go through Navy Federal end up paying a higher mortgage than someone who went through a traditional way of doing it, because they're putting that money on the back burner. It's not really 100% like they're saying it is. But nevertheless, most local lenders know the local programs. So because they know the local programs, it's always beneficial because they can tell you what's being offered in your area. Like, we're in the DMV area. Like, for example, in DC, they have NACA, they have HPAC, they have DC Open Doors. You speak to somebody at Chase or Wells Fargo, they're not going to know any of these programs, because they don't offer them, and they don't know it because they're not the local beneficial for most buyers. But they will tell you to go through them because they can still finance you as long as you got money. Of course, anybody. But if you're trying to, maximize your dollar, if you're trying to get a break, if you're trying to see what programs you might potentially qualify for, a local lender will always be the best choice. And on top of that, most local lenders can close the deals within 21 to 30 days, unlike big banks that take 45 to 60 days. So when you're making offers, and if it's in a competitive market, most sellers are looking at how soon a property can close, because let's be honest, most sellers want their money as soon as possible. They don't want to wait a long time. So even though some buyers may say, well, I want to do 60 days, in a seller's eyes, that's more like a red flag. Like, if you want this house, why wouldn't you want to close as soon as possible? Most local lenders can close a deal within 21 to 30 days. Most big banks need 45 to 60 days. So it's a disadvantage if you submit your offer to someone and they see that it's Chase on there, and they be like, oh, that's Chase. But then they know it's going to take 45 to 60 days. Then you see a local lender, a reputable lender, that can close it in 21 to 30 days. Most sellers want their money as soon as possible, unless they're in a situation where they're buying another property, or they haven't moved out, or they're delaying for some type of reason. But in most cases, if the property is vacant, if they're ready to move as soon as possible, once they get an offer on the property, they want their money as soon as possible. So on top of that, most local lenders give you a personal touch because you can reach them after hours. With most local lenders, it's not just banking hours. Don't get me wrong. There are some people who still not going to pick up their phone after a certain time, period, regardless if they were working with a big corporation or small corporation. That's just how some people are. They cut it off at a certain time. But in most cases, when you can text a local lender, in the big banks, they're not giving you their cell number. So you got to call their number at their desk and everything. So again, when it pertains to big banks versus local lenders, there's more beneficial using a local lender because you're still going to get the actual home. And a lot of times with local lenders, they can also have a slightly edge when it pertains to the interest rate. Again, that's always situational and contingent upon the buyer's credit, like your own personal DNA. But in many cases, I found in my nearly 19 years of doing real estate that most local lender offers tend to be a better, smoother transaction. And in many cases, the buyers are more happier with them, and they have more beneficial with the programs or incentives that the local lenders have versus the big banks. So I just wanted to say, when it pertains to big banks versus local lender, 9 times out of 10, depending on the property you're buying. If you're buying anything over $1 million, yeah, go ahead on and use a big bank. I would strongly suggest it. Okay. If you're buying anything under a million, I would strongly suggest using a local lender. So that's what I wanted to say about local lender, and I will be right back. All right. Thank you for joining me. So today, I want to talk about Q&A, my question and answer, and also real quick, I want to go into my financial term. You all know now that I always talk about something financial, because everyone in the world wants to live comfortably. A way that people can live comfortably is having good health and good wealth. Now, if you all don't work out every day, if you don't work out at least several times or once a week to maintain your health, shame on you, okay? Because you can do 30 minutes jumping rope, jumping jacks, sit-ups, or whatever. So shame on you. So when it pertains to wealth, and because I've also gotten into the financial literacy world, I tend to like to share knowledge because I feel like knowledge is power. So I want to briefly talk about a Roth IRA versus a traditional 401k. Now, there are many people who have a 401k on their job, which is great because most of them, you know what I'm saying, it's a $23,000 a year contribution limit for employees under 50. But adding a Roth IRA into the mix kicks things up a notch. If you can max out both your 401k and a Roth IRA contributions, you'll invest a total of $30,000 in a given year. If you're 50 or older, you can add an extra $7,500 to your 401k contributions and $1,000 to your Roth IRA contribution. So let me simplify it. Unlike a traditional IRA or a traditional 401k, the Roth IRA is one of the few tax advantages accounts that allows you to withdraw the money you contributed at any time for any reason without paying taxes or penalties. And I say that to say is when you work on a job and you've been contributing to your 401k and an emergency come out, guess what? You can't get that money. Ask me how I know. Because many years ago, something happened to me and I needed to get the money that I was contributing and I couldn't get it. And it was very frustrating. But if you had a Roth IRA, guess what? You can make that contribution there. You can pull the money as needed. It is very beneficial for people to open up their eyes to all the options because unfortunately, people feel like when they work on jobs that their job is looking out for them. And your job is not always looking out or not doesn't always have your best interest at heart as far as what's best for you. Because what people fail to realize is even companies that have even companies that have 401k and they give all these incentives, those companies get a tax benefits for giving you all those incentives. But people don't know that though. I do because, like I said, I'm in the financial world and I've learned so much. And again, the benefits that are given to the employers is very minimum compared to what the employers can be getting themselves. So I just wanted to talk to people to please look into a Roth IRA. Add that to your 401k. You can contribute $1,000 a year. A year. Some of you will spend more than that when you go drink, when you go partying, when you go shopping, when you take vacations, when you eat out. $1,000 a year will put you in a better financial position 5 to 10 years from now than you going to buy them new Jordans or you going to buy something to drink. Just pause one time, take some of that money and add a Roth IRA to your financial portfolio. And I guarantee you in 5 to 10 years, you'll be thanking me. And if you need help with finding out what's the best Roth IRA for you, please feel free to reach out to me so I can guide you in the right direction. So I want to do my Q&A real quick, which is my question and answer. I was speaking with a gentleman this week, and we were talking about an array of things, and we were talking about, of course, real estate. And his question to me was, what's the average house going for in this area these days? Basically, he was asking, what's the average cost on homes? And I thought that's a great question. And I'm going to tell you what I told him. It really depends on specifically where you are referring to and where you live, because I'm in a tri-state area in DC, Maryland, and Virginia. And because I'm in a tri-state area, there's DC, there's Maryland, there's Virginia. Okay, so I'm gonna give some statistics for the local area. All right. So here's the thing: in Maryland, in Prince George's County, this year, since last year, home sales have grew by 8.5% in Prince George's County. 8.5%. I want you all to think about that, y'all, because so many people have always talked about the interest rate. The interest rate. I'm waiting on the interest rate to go down. Interest rate, what is that? 7.25 right now. The interest rate right now is lower than the growth of homes. So while you all are waiting for the interest rate to go down, the sales of homes, the value of homes are increasing more than the actual interest rate is at this moment. So I always like to explain to people that when you're purchasing a home, the most important thing is your monthly payment. That's the most important thing. The cost of the house too, but the most important thing is the monthly payment. And the reason why I say that is because I've had clients who purchased $900,000 homes and also $300,000 home. And guess what? They were paying around the same amount mortgage wise. Big difference, right? $600,000. But it was the way that they structured the loan. It was the way that they structured the whole thing financially that they were able to afford the 900,000. And the reason why I say that is because people are focusing on the wrong thing. When you're just focused on the interest rate, you're focusing on the wrong thing because it's more than just that number. So you have to look at the cost of the home, the interest rate. You have to look at your monthly mortgage payment, the taxes. There's so many numbers involved in the equation. That's 4 different numbers involved in the equation, but people are focusing on one, 25%. So if you took a test, 75% means you passed. 25%, if you only got 25%, that means you fail. So the point that I'm making is I'm just sharing Prince George's County right now, which since 2023, the home sales have grew in value 8.5%. Okay. Let me go to Montgomery County, Maryland. All right. In Montgomery County, Maryland, okay, the average medium sale price is $650,000. That's a 6.6% increase from a year ago. The average call a year ago was 610,000. The average call today is 650,000, a 6.6% increase. Again, people need to focus on their monthly mortgage payment, not interest rate, because people are still buying homes, y'all. All right. In Washington, D.C., the average median sale price is $695,000. Now that number has actually gone down, I believe. I thought it was like 750, 775. But since last year, it's gone up 5.3%. Because last year it was 659,900. Now it's 695,000. So look at that. That's 5.3%. So when we look at that difference of 5.3%, and if the interest rate is, let's say 8%, I'm just using that number, even though it's at 7.25, I'm gonna say 8%, and it's gone up 5%, and you're waiting stuff to go down to 3%. Guess what? That's like you're even. You're still going to be paying the same amount. So if the interest rate went down to 3% today, last year, and the increase of 5.3, you're still paying the same thing because it's not offsetting. So as the price of homes continue to rise, the interest rate is not going down in a significant way to the point where, oh, I'm saving so much more money. Actually, you're missing out. That's why people have smartened up and they actually started to realize. So now people are going out there buying. And Northern Virginia average cost is $700,000, and the average rate has gone up over 6%, y'all, from last year. 6%. So overall in the area, it's roughly about a 6% increase that the average has gone up. So again, at 8%, if the interest rate is 8% and you wait for it to go down to 2%, but yet the price of houses are going up 6%, you're basically even. So it's not good to just focus on that part of, when it pertains to real estate. That's a great question. I'll be right back, y'all. I'll be right back. All right, real quick, before I go on my topic of the day, I want to go over the home of the week. Last week, I talked about this home. This is a property at 2814 Rhode Island Avenue Northeast. This price is starting bid is $375. Want to bring it up. It's gotten a lot of inquiries, a lot of questions, a lot of people asking questions about it. So right now, you all can see that I'm basically showing you the work has started on it. This was a project by a developer. And what ended up happening is the developer said he actually got tired of it because he was dealing with other projects. So he just wanted to get rid of it. Great bone structure. As you can see, the contractor started on everything. They actually, and guess what? The starting bid is only $375, and this is in DC. So if you can get this thing at anywhere from $600,000 and less, and if you put in, normally the average cost in DC, depending on the project, is between $150,000 to $300,000. They've started on a lot of the work, so I would say to finish this up, probably take about another $150,000. So let's say hypothetically you got this at $500,000, you put $150,000 and $650,000, and then on the same block there's a house that just was appraised at $1 million. So if you could sell this thing at anywhere from $1 million, even if you sold at $900,000, you put $150,000 into it, you're still coming out $250,000 profit and everything. So you still walk away with easily over $100,000 plus. But that's just me going through my head real quick. So mathematically, you will have to do the math. But I just wanted to share that property because that is the property of the week. All right, y'all. My topic of the day is value proposition. Now, when I talk about value proposition, I'm talking about everyone. What is your value proposition? Because a lot of times I see people, and I was somewhere yesterday and I was listening to a young lady talk, and she was saying that, when she goes out on dates, guys got to buy all this and all this other stuff for her. And I kind of glanced over, looked at her, and then I started thinking, like, why would somebody want to? And a lot of times some people in this world feel as though that their presence alone makes a difference. And I think they fail to realize is your presence only matters to those people who care. And it only matters to people who value quality time. If you're not adding any value, your presence is of no value because people don't care. See, we all have someone in this world that we miss. You understand? Like they are no longer here. We value them. That's why we miss them. We value what they brought to us. But nowadays, some people fail to realize and misconstrue their presence. They think their presence is worth dollars. They think their presence is worth whatever it is they think is worth. But truth be told, it's only worth something to you. Because unless you matter to someone, no one cares if you come into a room. They might look, but they don't care. They don't care if you leave the room. They're not concerned. And the reason is, in this world that we live in, we want to feel important to everyone that we encounter. But everyone that we encounter, unfortunately, are not going to think that we're important. But the people that you love, the people that love you, should know how much you value them. And at the same time, you should bring value to them. You bring value with conversations. You bring value by insights. You bring value by being an asset, not a liability. And that doesn't mean just because you have an ass that sets. It means that you bring some type of, significant quality to that person to when you're not around, that person will actually miss you because you made them better. You made whatever the work environment better. Like in some positions, I see some people who work on jobs, and I can see some secretary or executive assistant who holds so much value. Like if she wasn't there, everything will fall apart. She holds so much value. In many cases, she holds more value than her boss or the CEO. In many cases, she holds value. So if she goes to another job, everybody missing her. Everybody's trying to replace her because she brought value. And truth be told, so many people out here don't even hold value. They don't hold value. They think their looks is value. They think that Oh, when I show up because I'm me. Guess what? Nobody cares about you except your immediate family, unless you adding value to people. And the problem is, truth be told, most people don't add value. They think their looks, their bodies, their money is of value. Yes, money is valuable because we all need it. But money can't fill a void in your heart. Money can't fill a void in your life. Money brings you happiness to a certain extent, but money doesn't always fulfill the need. And what I'm saying is, though, is a lot of times we don't hold enough conversations with people to understand the true value of people. We don't understand what's going on in their head. We don't understand what's going on in their heart, because all we're thinking about is ourselves, or we're thinking about money, or we're thinking about their body or sex or whatever the case may be. But truth be told, y'all, there's a lot of people who are useless in this world. That's why sometimes when people deal with people on the job and somebody didn't come to work, but it didn't matter because they weren't productive anyway, or somebody's in a relationship and then they break up, it didn't matter. You don't miss them anyway because they didn't do anything. But then sometimes they may miss you because you are of value. You know, the more you talk to people, the more you'll find out who's of value and who's not of value. People who take out from your life, they're not of value at all. They're actually draining you. They're a liability. You know what I'm saying? You ever deal with that? Even in our own family, sometimes we have people who are not of value. They're liability. Those are the people who don't contribute, who eat up everything, use up the electricity, complain, make a mess, don't clean up. And then if they get some money, you don't know where they at. They didn't disappear, or they haven't contributed to anything. So I say this, y'all, when you are reflecting on yourself, when you're somewhere by yourself, what is your value proposition? And then when you're dealing with someone, what is their value proposition besides money, looks, sex? Because all that you can get a nice looking person today. You can get some more money tomorrow. But what makes you irreplaceable is your value proposition. See, money is replaceable. A nice looking person is replaceable. But some things and some people you ain't gonna never get again in this world. I don't care how many people you meet. And that's the value that they hold. That is their value proposition. So I just say that to say, y'all, please add value to the people that you're around, to the people that you speak to, that your loved ones. Add value. Please don't assume that your looks alone, that your presence alone is good enough. Because truth be told, if you just showing up and you're not of value, they ain't saying it, but I'm going to say it for them. They can care less about you being there or not. You know why? Because you hold no value. The most missed people in the world, like your grandmother, held value. She taught you things. She talked to you about things. You know what I'm saying? The most important people are the great secretarial workers who do the extra work and everything. That when they don't show up, you can tell. Those are of value. The most important people is the person in your relationship who was there for you when you ain't had nothing, had your back, did things for you without you even asking. Then y'all broke up and you got somebody else who wouldn't even lick up a finger and act like you owed them everything. But you missed the other person because they held value. And same thing when it pertains to parents. You got some good mothers out here who make sacrifices for their kids and do everything for their kids. And if something happened to them, their kids miss them because they know the value their mother had. And with some mothers, give their kids to their mother, the grandparents, all the time, and then never spend time with them. You know, value is something that is missing in the world because everybody is so egotistical and so full of pride and so full of themselves that they think they the ish. They think they the ish. And they think just because they walk into a room, you know what I'm saying? That's why people show up late to events sometimes because they want to be seen. They want all eyes on them and stuff like that. You know what I'm saying? Listen, I'm just saying your value proposition will take you much further in this world than your looks, than your body, than your money. And that's all I want to say about value proposition. Okay, you all. I am about to do my closing remarks. And again, before I leave, I want you all to please, 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 please follow me on all social media platforms. That is Facebook, LinkedIn, YouTube, Twitter, Instagram, Snapchat, TikTok. And I think I said LinkedIn, right? Well, please make sure you'll follow me on all those for those who are not following me. And please share my videos and posts because someone could use it. So recap for today is big banks versus local lenders. Big banks are good for their name, but they're not good for their game. Local lenders close deals quicker. Local lenders are more accessible, and they have more programs than the big banks do. Most big banks take longer to close, 45 to 60 days, and it's hard to reach people, especially after hours. And then also I talked about a Roth IRA. Please look into it if you don't know about it, and if you need more information, please reach me, DM me. I will gladly point you in the right direction. I have a lot of great financial analysis people that I work with, so I'm here to help. And then also I talked about value proposition. Listen, we all hold value. It just depends on what it is. And it depends on what we share and what we give. You have more than just your looks to give people. You have more than that. You have what's in your brain. Please start sharing what's in your mind, because the conversations you hold will stick with people for a lifetime. And I just wanted to say that. Thank you again. I will see you next Friday, same time, same station. And check out my website, DamonTheAgent.com.